Responsibility and economic growth will come to order. Good afternoon and a real welcome to our panel of witnesses. Today, the Subcommittee on Fiscal Responsibility and Economic Growth is examining ways to provide relief to small businesses in New Hampshire and all across the country due to a 2018 decision by the Supreme Court. Across the country who are due to a 2018 decision by the Supreme Court, incurring significant costs because they are required to collect sales taxes for out-of-state governments. As a result of the Supreme Court's Wayfair decision, whenever a small business sells to a customer who lives in another state, that small business could become responsible for collecting sales taxes for one of the 10,000 to 12,000 state and local tax jurisdictions in the United States. That 10,000 to 12,000 figure is an estimate. There are so many taxing jurisdictions and their interrelations are so complex that even sales tax experts cannot agree on how many of them there actually are. These thousands of state and local tax jurisdictions can have vastly different sales tax rules, including different tax rates for the same product, different definitions of the same product, and different paperwork that they require small businesses to file for selling the same product. In 2022, a New Hampshire business owner testified to the Finance Committee that his business now spends $50,000 a year to comply with the obligation to collect sales tax for 1,500 out-of-state governments. These costs include annual software licensing, registration fees, tax filing fees, accounting fees, and legal advice. Although sales tax collection has hit small businesses especially hard in states that don't have sales taxes, like my state of New Hampshire, small businesses in every state across the country bear these burdens. This morning, over 60 small businesses representing 28 states with sales taxes sent a letter to congressional leadership calling for relief from the burdens of remote sales tax compliance. It is past time for Congress to take steps to alleviate these burdens and lower costs for small businesses. Today, I'll highlight 3 steps that could provide much-needed relief to small businesses. First, Congress should require out-of-state governments to increase the simplicity and consistency of sales tax laws for remote sellers, which would lessen the burden for small businesses that are currently forced to act as sales tax collectors for thousands of tax jurisdictions. These requirements should include simple, transparent tax rates within every state and consistent definitions of products across states. Second, Congress should ensure that out-of-state sales tax paperwork is as simple as possible for small businesses, such as through standardized forms across states and centralized filing portals. Third, if out-of-state governments require small businesses to collect their sales tax, these governments should provide small businesses with no-cost compliance services. This should include free software and third parties that serve as intermediaries with auditors, along with protection from penalties for sales tax mistakes made by software or other third parties. These issues are reflected in a legislative discussion draft that I released this morning, which details proposals to cut these burdensome costs for small businesses. Although I believe that the Wayfair decision was wrongly decided and should be reversed, I recognize that many of my Senate colleagues approach this issue from a different perspective, and I look forward to working with them to find balanced ways to provide small businesses relief from the burdens I've outlined. I'd like to thank our witnesses for testifying and thank Senator Grassley for holding this hearing today, with me today. And Senator Grassley, I now recognize you for your opening remarks.
Thank you, Chairwoman, for having this hearing. It follows on problems. In other words, the Supreme Court didn't settle everything, and we're dealing with what they didn't settle. For most of the internet history, Supreme Court precedents barred states from compelling online retailers to collect sales tax on out-of-state remote sales. For decades, Congress grappled with the question of whether to use its power under the Commerce Clause to grant states authority to do so. We heard passionate arguments from advocates on both sides of the issue. On the one hand, states with sales taxes argued that rapidly increasing online sales threatened revenues necessary to fund their vital government functions. On the other hand, small online retailers worried that the burden and the cost of complying with the sales tax rules in thousands of states and local tax jurisdictions would be crippling. My good friend, now deceased, former Senator Mike Enzi, was a strong proponent of granting states authority to collect sales taxes from online retailers. His Marketplace Fairness Act would have allowed just that, but only if a state joined the streamlined sales and use tax agreement or adopted certain rules designed to minimize compliant costs and protect small business. Then, as we all know, in 2018, the Supreme Court flipped the script with its ruling in South Dakota Wayfair. The court overturned prior precedent, effectively giving the green light to states to compel online retailers to comply with state and local sales tax rules. While the Supreme Court decision in Wayfair suggests constitutional limits on states' interstate taxing authority remain, it largely, as we are now finding out, punted the issue to the Congress, and hence today's hearing. This leads us then today to the many issues Congress grappled with for years prior to Wayfair. These problems and issues still remain. Only now the question is, what, if any, federal rules are necessary to minimize compliance burden and provide guidance to the states? Today, we'll hear about challenges many online retailers face as they attempt to navigate sales tax rules that vary widely from state to state and even jurisdiction to jurisdiction. We'll also learn about actions states have taken since Wayfair. As a member of the sales tax and use tax agreement, Iowa, my state, has voluntarily implemented reforms to facilitate and simplify compliance by online retailers selling into Iowa. However, only 24 of the 45 states with a general sales and use tax have joined Streamlined, and no states have joined since the Wayfair decision was handed down. So obviously, this hearing is a very important issue, or a very important way to move forward on this issue, and I thank the chairwoman for handling it. Thank you.
Thank you very much, Senator Grassley. Now I'd like to introduce our witnesses. First is Joe Bishop Henchman, the Executive Vice President of the National Taxpayers Union Foundation, where he focuses on state law and litigation. Mr. Bishop Henchman has authored over 100 studies on tax policy, and his brief in the Wayfair case was cited twice by the Supreme Court majority. Our next witness is Craig Johnson. Mr. Johnson has been the executive director of the Streamlined Sales Tax Governing Board since 2013. This board oversees the Streamlined Sales and Use Tax Agreement, which 24 states have adopted, and has simplified sales tax administration in its member states. And our final witness is Diane Yetter, the president of Yetter Tax, a sales tax consulting firm. She's also the founder of the Sales Tax Institute, which educates business professionals about sales and use taxes. Ms. Yetter advises business clients of all sizes regarding sales tax law and sales tax compliance technology. Thank you, all three of you, for being here today. As is customary, your prepared statements will automatically be made part of the record, so please use your 5 minutes of testimony to summarize. Mr. Bishop Henchman, you're recognized for your opening statement.
Chair Hassan, Ranking Member Grassley, and members of the committee, I'm pleased to testify today on the important issue of finding solutions for small businesses engaged in interstate activity who must collect for, shall we say, 11,000 sales tax jurisdictions in the United States. When the Supreme Court decided the Wayfair decision in 2018, the court cited 3 features of South Dakota's law as laudable: a safe harbor protecting those who transact limited business in the state, a ban on retroactive collection, and membership in the streamlined sales and use tax agreement to reduce administrative and compliance costs while preserving state tax sovereignty. The court majority of 5 justices invited Congress to legislate further, particularly with the impacts on small business. The other 4 justices, while they didn't join the majority, they didn't join it because they thought only Congress should act. So you have 9 out of 9 justices who called on Congress to act. But in the 6 years since, Congress has not acted. In that time, we've seen lots of good news, but also several points of bad news and some ugly portents of things to come. First, the good news. Many states have a safe harbor protecting small businesses, with 22 states having the gold standard of protecting high-volume, low-dollar remote sellers by just having a dollar threshold. What's the bad news? While all states ban retroactivity in principle, revenue officials in 6 states so far have tried or are trying to enforce pre-Wayfair laws and regulations to achieve retroactive collection in practice. And the ugly news was, has been mentioned, only 24 states are members of the Streamlined Sales and Use Tax Agreement. In the other 22 states, remote sellers are required to collect sales tax, but without many of the efforts at uniformity, simplification, and standardization that remote sellers selling into South Dakota and the other SSUTA member states benefit from. The efforts that the Supreme Court cited favorably when they upheld South Dakota's law. Many of these states do not provide access to tax rate lookup software for businesses. Many of these states do not adhere to uniform rules of products, uniform definitions of products. Many of these states do not recognize other states' exemption certificates. Some of these states do not even offer centralized registration and filing for all the jurisdictions within the state, much less for all states. This is not a red or blue state issue. Every state doing everything differently, or in many cases the same thing, just in a different way, creates separate and duplicative procedures, which is problematic for small businesses. Sending the same information 46 different ways to 46 different states creates costs. In 2022, we estimated at NTUF that nearly 50,000 businesses nationwide are not complying and risking being caught. The GAO noted research that a majority of remote sellers are not complying. The last 6 years since Wayfair have been a period of flush state budgets, so states have had little motivation to crack down on noncompliance. That may change, probably will change, in the next period of state revenue shortfalls, and then you may suddenly hear from lots of businesses when it is too late to help them. So what do we do? I'm pleased that the Streamlined Sales and Use Tax Agreement is represented at today's hearing. SSUTA works hard to create a framework for uniformity and standardization that eases compliance burdens while respecting state tax sovereignty. All states should join it. Alternatively, states who do not wish to join SSUTA should demonstrate that they have taken steps to reduce compliance costs for their sales tax administration. For example, Texas is not an SSUTA member, but has adopted an innovative law that allows sellers to collect either the 1,600 local sales tax jurisdictions in Texas, or one single tax rate that is the average of all of them, and the state is responsible for collecting it and remitting it. Congressional legislation could also build on where most states are ending up, such as dropping transaction thresholds from safe harbors, prohibiting retroactive collection, and aligning local sales tax rules with state sales tax rules. The few states that have broken from the pack on these common sense measures can inflict enormous damage on the national economy by imposing outsized compliance costs. The pre-Wayfair legal and policy situation was not fair to brick and mortar businesses or to states, but we should make sure the pendulum doesn't swing so far in the other direction that it rewards bad sales tax administration practices. The goal should be an easier sales tax apparatus for all. NTUF stands ready to be a constructive voice in that effort. Thank you for the opportunity to testify today.
Thank you very much. Mr. Johnson, you're recognized for your testimony.
Chair Hassan, Ranking Member Grassley, Senator Wyden, thank you for allowing me to testify today about what the Streamlined Sales Tax Governing Board has developed over the past 20 years and how it provides businesses relief with respect to their remote sales tax obligations. My name is Craig Johnson. I am the Executive Director of the Streamlined Sales Tax Governing Board, also known as SST. SST is made up of 24 member states committed to sales tax simplification and uniformity for all sellers, while at the same time respecting state sovereignty. The SST member states have implemented many changes to their sales and use tax laws that greatly assist remote sellers as they grow their businesses and comply with each state's remote sales tax collection requirements, as noted in my written testimony. I want to highlight a few key points. First, SST was not created just by the states. SST represents a successful collaboration between the states, local governments, and the business community that simplifies the sales tax systems for all sellers nationwide. The SST agreement represents a blueprint for all states to follow to substantially reduce the burden of tax compliance for all sellers, including remote sellers. Second, the SST member states developed a certified service provider program to reduce compliance burdens faced by sellers that did not have physical presence in a state. The states also developed a compensation program that allows both small and large remote sellers the same opportunity to participate in the CSP program at little to no cost, because the CSPs are fully compensated by the streamlined states. CSP program has been operating successfully in the SST states for over 18 years and was designed specifically with remote sellers in mind. Next, I want to mention some of the key uniformity provisions the U.S. Supreme Court recognized in its Wayfair decision in 2018, and also some other provisions that have been implemented in this SST states. The Supreme Court specifically pointed to a single state-level administration of state and local taxes imposed, uniform definitions of products and services, and simplified state and local tax rate structures. In addition to those items, the SST states also provide a free and simple online registration system that any seller can use to register in any or all of our member states, taxability matrices that indicate what is taxable or exempt in each state, uniform exemption rules, and a whole host of disclosed practices to provide remote sellers answers to the questions related to their remote sales tax collection obligations. Next, I want to comment on the recommendations identified by the Government Accountability Office in the 2022 report related to remote sales tax collection. The GAO's report identified recommendations that could be implemented state, by multiple states, or nationwide. The SST member states have already implemented a number of the GAO recommendations, including centralized administration, single statewide tax base and rates, free or reduced cost of software for remote sellers, and uniform definitions. With respect to the nationwide recommendations, SST tried for over 15 years to get congressional approval for remote sales tax collection authority. When Congress could not agree on a legislative solution, the state of South Dakota obtained the Wayfair decision from the U.S. Supreme Court. I request that Congress recognize that the SST member states have been doing the right things since the Wayfair decision by continuing to work with the business community to develop solutions when difficulties are encountered with remote sales tax collection. Lastly, I want to touch on one of our other successes. Over 29,000 active sellers are currently registered through the SST program. That number continues to increase by an average of 200 to 400 sellers every single month. SST's success, though, is about more than the number of sellers registered and the tax dollars collected. It's about leveling the playing field for all sellers, making sales tax systems simpler throughout the United States, and providing clear and concise guidance to all sellers so they can voluntarily comply. The SST states have developed various materials to make remote sellers aware of and remove the burdens of sales tax compliance in all of our member states. Those materials are free to everyone on our website. In conclusion, the SST states want remote sellers to be successful, and we're committed to making their sales tax systems simpler and more uniform so that businesses can more easily comply with their sales tax obligations. Our simplification provisions can make this process manageable for sellers. The SST states will continue to work with the business community and implement remote seller collection authority they were granted in the Wayfair decision in a fair and reasonable manner. I thank you again for the opportunity to explain what the Streamlined Sales Tax Governing Board has accomplished over the last 20 years in partnership with the business community. I am proud of this streamlined sales tax program and know it's making sales tax compliance simpler for tens of thousands of businesses throughout the country, including in each of your states. I stand ready to answer any questions you may have.
Well, thank you, Mr. Johnson. And now, Ms. Yetter, you are recognized for your opening statement.
Thank you, Chair Hassan, Senator Grassley, and hopefully Senator Wyden, for the opportunity to talk with you today. I am Diane Yetter. I am the president and founder of the Sales Tax Institute and Yetter Tax, a woman-owned small business. We provide sales tax education, resources, and consulting services to a variety of clients. My 40-year professional career has been spent in the sales tax field. I'm a licensed CPA and an active board member of the Business Advisory Council of the Streamlined Sales Tax Governing Board. My remarks today are my own and not on behalf of any client or association. As discussed before in my testimony before the Senate Finance Committee in 2022, I have long been a proponent of rules that result in equitable collection responsibilities of sales tax by sellers. I have 3 key points to share with you today. First, the determination of the correct tax to collect from customers shouldn't be a guessing game for the sellers. The states need to make the taxability rules as well as rates and boundaries clear, accessible, understandable, and fair. Second, the determination of undue burden shouldn't be limited to only remote sellers. No seller, even those with retail operations in a state, should incur undue burden to act as the collection agent on behalf of the states. Third, Congress, the Streamlined Sales Tax Governing Board, and all states can take action to further reduce burdens on business. An inherent challenge in state sales tax is that each state gets to make decisions about what their tax base will include, as well as the rate that will apply. I support states' rights to make these decisions. However, in my opinion, the most significant burden facing sellers is understanding how different states define or classify any item, and then they have to find out how it is taxed. Sellers should not have to guess as to what the correct tax rate or taxability is that applies to any transaction. One example is something as simple as a Twix bar. Is this candy or is it grocery? Why does it matter? In most states, candy is taxable and grocery is exempt, but the states don't consistently define candy or grocery food. If it isn't clear how a seller can classify a Twix bar, how can they determine something more complex like digital goods or services? There has been much discussion regarding the economic nexus thresholds that apply to remote sellers. However, many of these sellers do not actually qualify as remote sellers, as they have some sort of physical presence in some, if not many, states. The elimination of the physical presence standard for sales tax would remove the confusion and uncertainty sellers face in determining where they're required to collect tax. This will also help reduce retroactive liabilities that these sellers are facing. I've worked with many sellers that thought they only needed to worry about economic nexus, not knowing that their Amazon inventory in warehouses created that physical presence. They had no idea that they should have been collecting long before the Wayfair decision. One of my clients is facing a $1.6 million liability across the states and doesn't know if they should even bother to comply. They're seriously considering just closing down their business. Costs related to compliance should not be an undue burden on taxpayers. The cost for sellers to serve as collection agents of the states continues to grow in the complexity of multi-state registration. 3 of my clients are sellers that participate in the streamlined CSP program, qualifying for the free software, but still incur costs ranging from $17,000 to over $143,000 a year just for the software and filing of the tax returns. That doesn't include their internal costs or fees paid to my firm to help them manage their sales tax function. Additional efforts beyond programs that provide free software should be explored, including a potential federal tax credit and direct funding to sellers from the states at higher amounts than today. The Streamlined Sales Tax Organization has made great strides in helping with all these issues. However, there are more actions it can take with this Congress and the states to further reduce the burdens on business. All states should focus on making tax information readily accessible and clear for all sellers, similar to the taxability and disclosed practice matrices provided in the streamlined states. Encouraging more states to participate in Streamlined either as full members or through some of the programs like centralized registration, the CSP technology program, or through centralized information disclosures. For the states that are already Streamlined members, uniformity of nexus thresholds, as well as expansion of common definitions and a centralized administrative function should be supported and/or required. And finally, the elimination of the archaic physical presence nexus standards in conjunction with more uniform economic nexus thresholds would remove barriers to business growth by reducing registration requirements for the smallest businesses. Thank you for the opportunity to share my experiences with you. I look forward to your questions.
Well, thank you all very much for very clear and interesting testimony. I'm going to start and do my first round of questions, then I'll turn it over to Senator Grassley, and then we'll see if Senator Wyden's available. Let me start with a question to you, Mr. Bishop Henchman. I want to start by highlighting the incredible complexity faced by small businesses that collect out-of-state sales tax. As I mentioned in my opening remarks, there are between 10,000 and 12,000 state and local tax jurisdictions, but the landscape is so complex that even tax experts can't agree on precisely what the correct figure is. So what makes the state and local tax landscape so complex that tax experts can't agree on the number of tax jurisdictions, and what does this complexity mean in practice for small businesses?
Yes, thank you, Senator. I'll take the second part of your question first. Just by giving the example of Halstead Bead, which is a jewelry components maker that we represented in our Louisiana litigation. They're a low dollar but high volume seller, and they want to comply, and they've kept track of the costs associated with compliance as well as the amount they've remitted to states. And by their calculations, for every dollar that they've collected in state and local sales tax, they've spent $2.64 in compliance costs. Okay. So just as an example from Louisiana, once they had 200 sales in Louisiana, even non-taxable wholesale sales, they were required to register with 64 different parishes and file up to 750 tax returns a year just in that one state. It's unfortunate because they want to create jobs and develop innovative products, not become tax compliance experts. And we're preparing additional lawsuits, but it's not practical to expect just litigation to solve this problem.
Thank you. I want to pursue one further point with you. There is a misconception that the burdens of collecting out-of-state sales taxes only hit small businesses in states that don't have sales taxes, when in fact there are businesses in every state struggling with these costs. Can you elaborate on the issues faced by businesses in states with sales taxes? Yes,
well, they're the same. And if you are only sell into one state, maybe the burden is surmountable because you're only keeping track of one set of rules. The complexity comes, even if all of the rules make sense, keeping track of 11,000 different rules.
Right. Thank you. Ms. Yetter, my next question is to you. As a tax practitioner who helps small businesses navigate out-of-state sales tax collection, I'd like to ask you about paperwork burdens on small businesses. In many cases, it can be extremely difficult for small businesses to identify, prepare, and file the appropriate paperwork with state and local tax jurisdictions. What are the compliance costs faced by small businesses in filing out-of-state tax paperwork, out-of-state sales tax paperwork, and to what extent would centralized filing portals and standardized forms help?
Thank you. Centralized registration, such as what the Streamlined Sales Tax Organization offers, is a huge reduction in the burden to just do the first step of registering. Right. We can register all 24 member states doing a very simple form with very few questions. However, when I have to go and file registration applications in other states, some of those states, their registration application can be close to 25 pages long, asking questions that are so invasive that you have to have individual discussions with the owners and officers of the companies to get the answers. In addition, the filing of the tax returns takes time also. Some of the states are fairly simple. A state like your neighbor state of Massachusetts that has only one state rate, that's an easy form to file. However, if I'm talking about the state of Texas or California, and now even my home state of Illinois, that return takes, in some cases, hours to complete, and you're doing that every single month. So those costs certainly add up. Software helps, but not everybody invests in that software.
Well, thank you. Certainly cutting paperwork burdens through, I think, centralized filing is a focus of my legislative proposal, and I think it would be a significant help to small businesses. Mr. Johnson, the 24 states that participate in the streamlined sales tax agreement have taken significant steps together to improve the consistency of sales tax rules across states. One particular area of focus has been standardizing product definitions. Can you explain how standardized definitions reduce the complexity faced by small businesses and how you've worked with both states and the business community to improve interstate consistency of these definitions?
Sure. So thank you for the question, Senator. So uniformity in and of itself is extremely important to businesses. And it's not just the small businesses when you talk about definitions, it's also the large businesses. And what we have done and what we have found is that many states before Streamline use the same terms. In many cases, they defined them exactly the same. And what they did, though, is they interpreted them different. So they could be the same words, but interpreted differently. What we have done with Streamline and the uniform definitions and the definitions that we've worked on and developed are things that the business community has brought to us because they are really in the best spot to say, look, we have a problem in this area. There's this defined term. Different states are treating it differently. We want a uniform definition. So what we do is we sit down with the states, we sit down with the business community, and we want to develop clear and concise definitions with bright line tests. They need to be objective definitions. As soon as you bring subjectivity into it, you've lost some control of what that definition means. Now, it can result in some oddities. Ms. Yetter mentioned the Snicker bar versus the Twix bar. But our definition of candy, if you look at it, it's got a clear, bright line. If it's got flour, it is not candy. It is just food. And those are the types of things that are important to the business community.
Right.
So we bring the states together, we bring the business community members together, and it's the business community members that are going to be affected by those definitions that provide such valuable input to us in our process in developing that definition. It's not a definition that the states sit down and say, okay, here's what it is, everybody's got to live with it. We need to make sure, and I want to make sure when I bring it to my governing board, that it's a definition that states can administer and the businesses can administer and understand.
I appreciate that very much. It's one of the ways that the Streamlined Agreement significantly reduces burdens for small businesses, and I certainly think Congress should look at ways to encourage all states to participate in these efforts. With that, Senator Grassley.
Thank you, Madam Chair. Mr. Johnson, I read your written testimony. You note that the Supreme Court recognized the work of streamlined sales tax states in removing barriers and burdens to interstate commerce. My question, since Wayfair decision, have states that aren't streamlined members enacted reforms to limit burdens on interstate commerce or taken steps to join Streamline?
Thank you, Senator, for that question. So with respect to have any states, the portion of your question asking about whether any states have joined Streamline that weren't part of Streamline prior to Wayfair, the answer is no. With respect to have they taken steps towards gaining membership or to doing things that the Streamline states have all done, the answer is yes. There are a number of states that have adopted some of our uniform definitions, for example. Now, have they adopted all of them? No. Could they become full members with that? No. But they've taken some of those steps, along with some of the other uniformity provisions related to exemptions and things such as that. However, you know, there are other things that some of those states have done as well since the Wayfair decision that Streamline states haven't done. Mr. Henchman mentioned what Texas has done with their local rates. They allow sellers, remote sellers, the option to collect one rate for all the local jurisdictions remitted to the state, and the state has to disperse that, as opposed to collecting and remitting each of the local jurisdictions. So I commend Texas for that. Pennsylvania adopted a similar program to what we have for the CSPs. I don't think it's as robust as what we have, but they have taken those steps. But most states have not done anything specifically that I am aware of to remove those undue burdens. Now, they have done what the Supreme Court noted in Wayfair, they did the no retroactive application, they put in a small seller threshold, but the question is, did they do the third thing, which is remove the undue burdens or join the Streamlined Sales Tax Governing Board? And I think that's the question that still remains, and that's a question the Supreme Court did not answer.
Mr. Johnson, 30,000 sellers have registered with Streamlined to collect and remit taxes to members. In his written testimony, Mr. Bishop Henchman notes it is estimated that nearly 50,000 businesses are ignoring their obligation to collect and remit sales tax and risk getting caught. In your view, would greater adoption of simplification requirements implemented by Streamlined members increase the compliance rate of retailers with the sales tax obligations? In other words, getting at those 50,000?
Thank you again, Senator, for that question. And based on a survey that we did of our sellers, and this was prior to my testimony in 2022, those sellers indicated that they appreciate very much what Streamline has done. They wish every state would do the same thing. They wish every state would adopt our simplification and our uniformity provisions. So as far as whether or not that would improve the compliance, I think the answer is yes, absolutely it would. I think our member states have recognized that the simpler you make the laws for sellers to comply with, the greater the voluntary compliance, and you're going to recognize the revenues, those are going to come along with it, because you're going to make it easy for business to be able to calculate, collect, and remit the tax.
Yeah, Mr. Bishop Henchman, you noted that multiple states have tried or are attempting to enforce pre-Wayfair laws. They're effectively seeking to retroactively collect sales taxes from retailers that had no legal obligation to collect such taxes at that time. Are individual states generally observing the Supreme Court's recognition of the need for simplification to avoid imposing an undue burden on interstate commerce?
Thank you, Senator. Unfortunately, not enough. And one tool that we thought would be in the toolbox to prevent one state or a handful of states from that one state imposing a huge burden on the rest of the country was litigation. And unfortunately, that's been undercut by the Supreme Court's recent National Pork decision. I don't know if you're familiar with that decision, but it really kicks the ball back to Congress for a fix.
Proposition 12.
I'm sorry, Senator?
You're talking about California Proposition 12.
Yeah.
Yeah. Do you see more states voluntarily adopting simplification measures or becoming Streamlined members as more time passes after the Wayfair decision?
I think after the Wayfair decision, a lot of experts predicted a stampede of membership to SSUTA that hasn't materialized. So at this point, my answer would be no. I don't see states joining unless there's some incentive for them to do so.
I've got a couple of questions I'll submit for answer in writing.
Thank you very much, Senator Grassley. I'll recognize Senator Wyden for his questions.
Thank you, Chair Hassan. It's good to see your leadership on this, and always good to be working with Senator Grassley. And I apologize for trying to juggle a host of things here as we try to move towards getting ready to make some big decisions tonight. And just want to put it this way. Senator Hassan has been our leader on all things on small business. And I remember when we held the hearing last on this and we challenged senators to put themselves in the shoes of small businesses. And small businesses in Oregon have been just tied up in a sea of red tape since the decision in Wayfair allowed other states to require them to collect sales taxes on online purchases. You almost have to be an accounting Einstein to collect taxes for 10,000 different jurisdictions. In Illinois, for example, you actually pay sales tax on a Snickers bar, but not on a Twix. If you take up sewing in New Jersey, you're in for some confusion. Yarn bought for art projects gets taxed, but yarn for sweaters, tax-free. Mr. Bishop Henchman, in your testimony, you talk about the burdens this sort of complexity puts on small businesses, not just those in Oregon and New Hampshire, but across the country. What would you say are the top things to make life easier and reduce costs for small remote sellers trying to collect sales tax for states across the country?
Thank you, Senator. First would be fixing things that are complex but don't need to be and shouldn't be. So something like exemption certificates. It's paperwork a seller needs to prove that they're selling wholesale. These differ state by state, even though it's the same information on them. We're essentially requiring dozens of forms when one will do. And there's a lot of examples of things like that happening just administratively. The other thing would be, it's a harder problem. It's when most states are doing something right, but one or two states aren't. One or two bad actor states creates a lot of complexity for sellers. You gave some good examples, and I could give even more, but every state, in my opinion, every state should decide its tax rate, but that doesn't mean every state should be defining candy differently or coming up with a unique way of rounding numbers up or down, as one state does.
So one form rather than 12 forms.
Or even more than 12, yes, sir.
That's way too logical for Washington, D.C. But obviously, kidding aside, this is important kind of work. And as I say, I'm juggling a lot today, but I'm so appreciative of Chair Hassan having this hearing. We began on these issues literally 2 decades ago with respect to setting up a policy, particularly as it related to technology. And we wanted to make sure that you didn't discriminate against the digital world, but also you put everybody on equal kind of footing. And when I started, I remembered there was an instance where if you bought the paper snail mail, you didn't pay a tax, but if you bought the digital edition, you paid a tax. And we said, look, we're just going to do our best to try to come up with a uniform, fair to all kind of approach. But nobody expected this kind of burden paperwork and a burden of paperwork. And I think you all are making a real contribution in terms of trying to move this ahead. And Chair Hassan, my apologies for the bad manners, but as you know, we've got some big tax things still being considered for before we go. And I'll look forward to working with you and particularly pursuing your leadership in this area.
Thank you very much, Senator Wyden. I really appreciate it and understand the juggling that we're all doing. Yeah, juggling time. I have about 3 more questions, and then I think we can wrap up because I wanted just to pursue a couple of issues more. Mr. Johnson, one of the programs that states participating in the Streamlined Agreement offer is the Certified Service Provider Program, which provides free compliance software to help collect sales tax and a third party that interfaces with auditors so that small businesses aren't overwhelmed with state audit notices. Can you tell us more about this program and how it reduces costs for small businesses?
Sure. Thank you, Senator. Yeah, our Certified Service Provider Program, you know, the easiest way for me to describe it is to think about what businesses have been doing for many, many years with payroll. They outsource it to a third party, right? They don't want to have to deal with the sales taxes. That's what our Certified Service Provider Program does. We have contracted with a number of companies, and we are open to contracting with as many companies as can demonstrate to us that they can provide the software and the services necessary to provide the services and the level of service that we expect. But as long as they can provide a tax engine that's going to take care of all the tax calculations, collections, return preparation, return filing on behalf of the sellers, we are more than happy to take a look at those companies. Now, when the Certified Service Provider Program started, and when a Certified Service Provider comes to us, they have to demonstrate to us that their program works in every one of our states. That means they have to demonstrate to every one of our individual member states that it accurately calculates, collects, and remits the tax. Now, once we have them certified, the only thing that the remote seller needs to do with respect to those CSP programs is explain what products they're selling. Right. They know the products they're selling, so they do what we call mapping the products. The CSPs have product categories. All our states have reviewed them and said, you're taxing that category correct or not, and if you're not, you need to fix it. And once you're fixed, we can go ahead and certify you. But then the remote seller drops their products into each one of those, in effect, buckets, each one of those categories. They do it one time. The CSP takes care of figuring it out for all the different states for them. So that program has been very successful for us. And the big difference between our CSP program and outsourcing payroll is our states pay for that. Right. Our states allow the certified service provider to keep a percentage of the tax that they calculate, collect, and remit on behalf of that seller as their compensation. States don't write them a check. The sellers don't write them a check for any of the states where they meet the definition of a remote seller or a CSP compensated seller as we define it, because they can have limited physical presence in a state and still qualify.
That's
that has
excellent.
been very successful for us. It continues to grow, and I expect to see that program grow even further.
Excellent. Well, thank you. Part of my draft legislation considers ways to expand this kind of relief to all small businesses, regardless of whether they're dealing with the state that participates in the streamlined agreement or not. So I really appreciate that outline and explanation. A question to both Mr. Bishop-Henchman and Ms. Yetter, and we'll start with you, Mr. Bishop-Henchman. We've discussed some of the steps that states in the streamlined sales tax agreement have taken to relieve burdens on small businesses. However, when small businesses sell products into one of the 21 states that are not members of the agreement, they face an entirely different landscape. Can you give us a sense of the issues that small businesses encounter when they sell into states that don't participate in the streamlined agreement, and how much greater the burden is on sellers when they have to deal with non-streamlined states than with streamlined states?
Yes, thank you for the question, Senator. Mr. Johnson referenced kind of in passing the taxability matrices that Streamline produces. If there was a Nobel Prize for tax administration, it should go to whoever came up with those taxability matrices, because it makes the answer very, not easy, but easier for retailers who want to know whether something is taxable in a certain state. That's only for the states within the streamlined agreement. For all of the other states, answering that question can sometimes be an almost philosophical exercise where you're trying to predict what the answer from a tax administrator would be based on case law or past administrative actions, which may or may not be published. So it can be very difficult. And just one additional point, sales tax is something that you have to get exactly right as a retailer, because if you undercollect, you're subject to audit and penalties. If you overcollect, you're subject to a class action lawsuit by your customers. So there really isn't room for gray area for small businesses and large businesses who want to get it right.
I appreciate that very much. Ms. Yetter, anything you'd like to add to this?
Thank you. And I think both Mr. Johnson and Mr. Bishop-Henchman have stated those very clearly. And the real challenge, as I said in my opening statement, is the product classification. So although Streamlined has a clear definition of candy versus food, in the non-streamlined states, if I map something to the CSP system of candy, is it going to be candy in California or in Maine or in Illinois? Maybe, maybe not. So the technology solution might have subcategories to map it to, but if I'm an unsophisticated seller and I don't know about these weird nuances in the states, I see a category candy, I'm going to map it to candy, not realizing that it could not be candy in some other states. So that's where the challenge comes in, and it's one of the reasons that I think the rigorous review that Streamline does of the CSP candidates, they're only focusing on the streamlined states, but they're pointing out some of these nuances that need to be in there. Not all of them are as robust as I would like to cover all of the non-streamlined states, but that's really one of the big challenges.
Well, that's very helpful. There's a clear difference between the costs that small businesses incur in dealing with streamlined versus non-streamlined states, and this should be reflected in legislative solutions that we consider here. Okay, last question, and again, I'm going to ask Mr. Bishop-Henchman and Ms. Yetter to answer it. I want to focus on the ways to ensure that small businesses don't have to collect out-of-state sales taxes. Many states have adopted thresholds that exempt small businesses from collecting sales taxes if they sell under $100,000 into the state in a given year. This $100,000 level is, as I understand it, based on South Dakota's threshold, which the Supreme Court cited in 2018 as a key small business protection. However, South Dakota is one of the least populous states in the country. It's much easier for a small business to wind up with $100,000 in sales into one of the bigger states than into one of the smaller states. So, Ms. Yetter, I'll start with you. How would a higher threshold help small businesses that are selling into larger states, particularly larger states that are not members of the Streamlined Agreement?
Of course, that is the question we all want answered. And as I said in both my written testimony and my opening statement, I think the biggest way to help reduce that is to eliminate the physical presence standards, because I have many clients that are well below the thresholds, but because they have inventory in a state or a remote employee or maybe attended a trade show that created that physical presence, that they're now having to register and collect even though they've never met the threshold, whether that threshold is the 100,000, the 500,000 in California, or a 200 transaction count. However, certainly having a higher threshold, and our three biggest states, California, Texas, and New York, do have a $500,000 threshold. Is that high enough as it compares to South Dakota? Obviously debatable, but if some of the other larger states, Illinois, Florida, and some of the others that are larger also had a higher threshold, I think that would definitely be helpful.
Thank you. Mr. Bishop Henchman, can you speak to how a stronger small business exemption would better reflect the burdens that small businesses bear in dealing with larger states that aren't members of the Streamlined Agreement?
Thank you. I would want to see a system simpler for all businesses, as Ms. Yetter said earlier, but I do acknowledge that the burdens can magnify for small businesses who are trying to sell in all states. And the burdens that we've talked about today, maybe they are surmountable if you just sell into one state or you're a large company who can spread the costs of compliance over many, many more transactions. But for a small business that wants to sell everywhere, the burden can be very high, almost lethal. So small businesses who want to sell into all states, as our technology and transportation and infrastructure enable us to, but who may lack a vigorous internal tax compliance department because they're a small business, they face a choice among three unappealing options. One, they can spend their money and time becoming tax experts rather than business owners. They could be bought out by a larger competitor or sell via marketplaces that charge for the compliance efforts, or they could not comply and risk being caught. Right. And I'm very worried about that third group, which I think is much larger than we know.
I appreciate that very much. A key part of my legislative proposal would strengthen small business exemptions by setting a higher threshold for small businesses selling into the larger states that aren't members of the Streamlined Agreement. So with that, I'll conclude our questions and thank all three of you for your testimony today, and also thank you to Senators Grassley and Wyden for attending. I look forward to continuing this conversation with my Senate colleagues and with small businesses in New Hampshire. This hearing record will remain open for 14 days until 5 p.m. on October 9th for submissions of statements and questions for the record. This hearing is now adjourned.